2025 is almost here, and everyone is asking, will the stock market soar or stumble? Analysts across Wall Street are weighing in. But here's the truth, short-term predictions are tricky, yet one thing remains clear: if you focus on long-term investing, history shows you'll be in a winning position. Today, we're breaking down what experts are forecasting for US stocks next year, the sectors they're excited about, and how you can position your portfolio wisely. After two blockbuster years, the S&P 500 surged over 23% in 2024. Following 24% gains in 2023, analysts expect 2025 to deliver more growth, but at a steadier pace. Most Wall Street strategists are pegging the S&P 500 around 6,500 by year-end, which is roughly a 10 to 12% upside from where we are now. This forecast assumes that U.S. economic growth continues near to 0.5% and inflation cools down toward the 0.4% by December. Potential rate cuts from the Fed could give stocks an extra boost, but with valuations already high, it's crucial for investors to stay disciplined and not get carried away. Now, let's look at what's happening inside the companies themselves. Wall Street expects S&P 500 earnings to grow by about 15% in 2025, fueled by rising sales across nearly every single sector. Tech leaders, consumer goods, and industrials are all projected to be major contributors to this growth. Even better, profit margins are forecast to hit nearly 13%, which would be the highest they've been in 15 years. That's fantastic news for investors. However, the high price-to-earnings ratios we're seeing mean that stocks could be very sensitive to any bad news. This just reinforces why having a long-term perspective is absolutely essential to weathering any short-term bumps. Technology continues to be the engine driving the market, especially companies related to artificial intelligence. Since late 2022, AI stocks have been responsible for roughly 75% of the S&P 500's gains. It's been an incredible run. However, some experts are now warning that the initial AI boom might be maturing, while big tech companies like Apple, Microsoft, and Nvidia will likely continue to outperform. Their growth might happen at a slower, more sustainable pace. Analysts at Morgan Stanley recommend being more selective. It might be time to trim some of the more speculative AI plays. Focus on the established leaders with proven earnings growth, and remember to balance your portfolio with other sectors for stability. One of those sectors could be healthcare, which has underperformed in recent years, but analysts see 2025 as a potential rebound year. Major innovations in specialty medicines, the new wave of weight loss drugs, and the expansion of telemedicine could all drive significant growth. JP Morgan also predicts that an increase in mergers and acquisitions will strengthen company balance sheets and create new investment opportunities. Historically, healthcare has been a steady, defensive option that often outpaces the S&P 500 over the long term, making it a very smart complement to your high-growth tech holdings. Now for energy and commodities, where the picture is a bit mixed. High oil prices and strong demand for natural gas are definitely supporting profits in the sector. But on the other hand, potential policy changes and shifts in global supply pose real risks. Experts are highlighting specific areas like pipelines, liquefied natural gas or LNG, and nuclear power as segments likely to outperform. Meanwhile, some renewable energy stocks may face headwinds in the coming year. The key takeaway here is that energy and commodities can provide excellent diversification and act as a hedge against inflation, but careful stock selection is absolutely critical. Financials had a strong 2024, largely thanks to higher interest rates. But that growth may moderate in 2025. Lenders and insurers are now facing tighter credit conditions and the possibility of new regulatory changes on the horizon. Looking at the broader market, even with an expected climb of roughly 10 to 12%, some volatility is pretty much inevitable. This is why analysts continue to stress the same point. Short-term predictions matter far less than your commitment to staying invested for the long term. And that brings us to the most important lesson of all. Time asterisk and asterisk the market beats asterisk timing asterisk the market. You've heard it before, but it's true. Historically, the S&P 500 has returned around 10% annually, which is about 6 to 7% after you account for inflation. Temporary pullbacks and market corrections are a normal part of the cycle. But history has shown time and again that long-term investors who remain diversified and focused on high-quality companies are the ones who win over the decades. So, what does all this mean for your portfolio right now? First, diversify across different sectors. It's great to hold tech and AI leaders, but make sure you also allocate to healthcare, energy, and perhaps some value stocks to create balance. Second, keep an eye on inflation and interest rates. But don't let scary short-term predictions cause you to panic sell. And third, remember that periodically rebalancing your portfolio and simply staying invested will matter far more than chasing the next big headline. To sum it all up, 2025 looks promising for US stocks. With expected growth across multiple sectors, but high valuations and policy risks demand a cautious and disciplined approach. Focus on long-term investing, stay diversified, and be patient. If you want to learn how to navigate the markets like a pro, make sure you subscribe now for our weekly investing insights and updates. And before you go, drop a comment below. Which sector are you most excited about for 2025? Thanks for watching.